first, I think the quarter was fine. I don't think it was terrible. It was exactly as I expected. We were talking yesterday, actually, about flat revenue growth. We got flat revenue growth, but we also got better profitability, which is the thing that kind of kept me in the name.
Yeah.
I mean, it was gross margins were much better than expected.
Outlook, though, no good.
But no, the outlook was not very good. And so it's like an opportunity cost is really the way I'm thinking about it. I think that they will eventually get to low double digit, upper single digit revenues eventually, Scott. But I don't know the timing. I think it's actually been pushed out as a result. They have a product cycle that's happening next year, but that's going to take a long time to get into the system. So for me, I think there are just better other ideas elsewhere within retail, but also within the broader market.
You think this is dead money?
I do, at least for the next 6 months. I really do. And so I would rather take that money. By the way, I'm up on the position a lot. The stock is still up 27% from the lows seen a month and a half ago. So I'm taking some of the profits and I'm going to deploy them into other things. I just think right now I don't necessarily need to buy something with the market, kind of on a tear.
This says that the 15% run since November 1st was bogus. That it was built on...
No. I don't think bogus.
Nothing.
No. That's way too tough.
Well, it's giving back 11% now.
But it's also up from the lows. It was up 37% from the lows, recent lows a couple of months ago.
I know, but January 1st to October 31st, the stock was down like 12%.
Yeah.
Everything that we've seen of late for this name has happened since November 1st till today, or till yesterday, before the sell-off happened after earnings.
Right, and I think that the excitement was from the analyst community. We talked about it. 4 upgrades, all kinds of reiterating buys, upping targets, and all that sort of thing. So the setup was terrible going into the quarter. But I think the excitement was on the margin side. The inventories are falling. Freight costs are falling. That's really, DTC is rising in terms of a percentage of total revenue. All that's really good. So their gross margins expanded 170 basis points. That is huge. The whisper was 160. They gave guidance last quarter of 100. So they really blasted right out there. Mm-hmm. But in my opinion, I think that it was just a lot of people got excited on the top line expectation, and I just never had that. I think eventually you're going to get that, but you just didn't get it this quarter. So It was ahead of itself. Stock was ahead of itself.
It's not like the street today is overwhelmingly negative. You got one downgrade. Okay, TD says they're taking it to market perform from outperform. They cut the target 104 from 129. Jan Rogers-Niffen, who was on with us this morning on Squawk on the Street, wasn't too concerned either. Said they're going to get it right. They're on their way to doing so. I'll come to you in a second because I got to go to you first, Farmer Jim. You sold the stock not that long ago, correct?
Last week.
That was a good call.
Yeah, I mean, some of it had to do with the luck of my timing of getting in right after the last quarter, which
Jimmy
was
Festive. That's what I'm calling you for the rest of the show.
Yeah, let's see if we can stay this way through the whole show. I don't know.
Just missing a Santa hat.
Okay, all right, but well, Santa didn't come to Nike shareholders. We'll say that.
No, he did not.
Look, this is a turnaround story. I mean, apropos of what you were saying about the first half of this year, actually most of the year the stock was down. People were looking for a turnaround. The last quarterly report gave a very good sign that the turnaround was in place. But with the guidance and the verbiage, the commentary that we got last night, I think there's considerable question. First off, no signs of help from China. That's an important part of the equation. But what you really didn't want to see is softening of demand in North America. And you did see that.
It was in line. It was in line. It was down 4%, but that was what expectations were.
The verbiage is that they're seeing softening. You're out of the stock. Why are you defending it?
Because I don't really think the quarter was the problem.
The commentary on the quarter, Stephanie's right, though. The quarter was actually okay.
It's the guidance going forward where they see softening.
What they talked about sort of globally
in North America. Right. You can't have that.
They talked globally about sort of consumers softening.
Yeah, which includes North America. You can't have that. At this point in a turnaround, you can't have it. Now, I don't think Nike is fatally flawed. That's not what I'm saying. Where I agree with you is for the next 6 months, it's probably dead money because when a stock turns around, not from a fatal mishap here, but from a cyclical downturn, when a stock turns around, you need 2 quarters in a row of good performance. You don't have it. It's reset after this quarter.
And the valuation. So this is like in contrast to Target, which is also a turnaround story, but it's trading at 15 times forward estimates with margin upside. This is trading at 33 times forward estimates. It's right up against its average. So there's just no room for error.
Joe, you sold it November 1st.
Yeah, we sold it November 1st.
You own Lulu.
Out of the JOT ETF. If you walk back and see the reason why it was initially placed in the ETF, it was because of momentum. It wasn't, in fact, the quality metrics that we observe. The reason that we sold it was the deceleration in the revenue growth. There was clearly that Nike was losing a little bit of that qualitative nature. There are stocks that have a stronger degree of sensitivity, if you would, to the macro. And Nike clearly is one of those stocks. You know, if you think about everything that you heard yesterday, what you continued to hear was promotion, promotion, promotion. Heavy promotion. Why? Because they're up against a challenged macro environment, very similar to what FedEx said the day prior. And I think, to Stephanie's point, I don't see the improvement in that over the next 6 months.
But you're not seeing a lot of discounting across the board in retail. I'll just go back to the conversation I had with Niffin this morning, who knows the landscape better than anybody. Said you're not seeing a level of bloated inventory and incredible discounting like you might have in the past. So maybe this is in some part a singularly Nike story. That Nike needs to get its you-know-what together. And it's not a read-through to any level on any other retail.
But does any other retailer have the magnitude of the exposure globally that Nike does? I mean, I would make the argument Nike is so heavily exposed geographically like no other retailer that we could really mention. So I don't know if that's fair. I think Nike's doing the right things. I think Stephanie's right. The margins were okay. They're embarking upon a $2 billion cost-saving initiative. It sounds like they're doing the right things. It just sounds to me like they're acknowledging it's China, it's Europe, it's the Middle East, that it's weak.